Working Man Investor, today's video: what does Federal Reserve Chairman Jerome Powell do, and does President Trump have the ability to fire him? Now, it's important to note, as of the making of this video last week, President Trump came out and did say he had no plans to fire Jerome Powell, and that he just feels like he's not acting quick enough to cut interest rates and like to see him be more proactive. However, I still felt this video was pretty important to make, to break down and explain what Jerome Powell does, how the Federal Reserve works, and what could happen if they lost their independence, and why I'm really happy the president has changed his stance on firing Jerome Powell and appears not to be pursuing that and stripping the Federal Reserve of their independence. So Jerome Powell is the chairman of the Board of Governors for the Federal Reserve. As the chairman, Mr. Powell's duties are guiding monetary policy, overseeing the national financial system, and representing the Federal Reserve on international matters. So it's important to understand that Mr. Powell by himself does not set interest rates. The interest rates are set by a vote from the Federal Open Market Committee. They're often referred to as the FMOC. A lot of people will just use that abbreviation instead of call them the Federal Open Market Committee. So the FMOC, they meet 8 times a year to decide whether or not to either raise or cut interest rates. They base their decision on 2 factors, predominantly: promoting maximum employment and low inflation. This is the Federal Reserve's 2 mandates, and this pretty much determines the economic data, what's they're going to lower or raise interest rates. There's 12 voting members of the FMOC, 7 reserve board governors, and 5 reserve presidents. They only need a majority vote. So each one of these people, and Jerome Powell is included in this, only get 1 vote, and they need just a majority. So 7 votes to raise or lower interest rates is what it takes for the Federal Reserve to do that. Now, when they do lower rates, all they're doing is they're lowering or raising the federal funds rates. The federal funds rate is the rate that commercial banks lend to each other overnight to meet reserve requirements. The federal fund rate influences interest rates on things such as credit cards, savings accounts, and auto loans. So for about a month, Jerome Powell was under attack by President Trump, who made it clear that he wanted Powell to lower rates and that he wanted Powell removed as soon as possible. As of the making of this video, it still doesn't appear that Mr. Trump has that ability, even if he wanted to, because the Federal Reserve is independent and is meant to operate independently from politics. However, there is a Supreme Court case to be heard on an appeal about Trump's firing of other board members of federal government organizations that are independent, that if they went the president's way, it could shed some light on whether or not he would have the ability to remove Mr. Powell. So now, even if the Supreme Court does rule that way and Trump were to get, hypothetically, the ability to fire Powell, and did fire Powell, again, Mr. Powell is only 1 vote of the 12 needed to raise or lower interest rates, so it would not guarantee replacing him that President Trump would get what he wants in lower interest rates. In order to be guaranteed that, President Trump would have to fire and remove all of the board members and replace them with pro-low-rate type people. So he'd have to handpick them, basically. So therefore, firing Jerome Powell alone would just be 1 step in dismantling the Fed's independence. Like I said, Trump would also likely have to fire the other board members, who would probably vote against interest rates going lower, because they would probably view President Trump's step as an overreach, and they would likely vote not to do it, which would then lead to him having to replace them. So let's just say that what would happen hypothetically if President Trump got this power and the Federal Reserve lost its independence. The biggest concern would be, of course, the collapse of the central bank's independence. Investors and other countries would likely lose trust that the Fed would focus on economic data, which is fight inflation and manage the money supply based on the economic data. By giving the president the power to fire the chairman of the Federal Reserve over policy differences would result in a loss of credibility that would be very, very difficult to ever repair. If countries and investors do not trust the Federal Reserve to operate independently and remain focused on the sound economic data that they do now that drives economic and monetary policy, and instead operate within a political environment, trust is lost. And you have to remember the dollar's strength depends on trust. It's not backed by gold anymore or any type of commodity. It is strictly trust and faith in the United States government, the fact that we're the strongest economy in the world and that we have the strongest military in the world. That trust is critical. So this would likely, if loss of trust would likely cause a backlash in the markets with the dollar falling and rates on treasuries rising. So what do I mean by that? So even though I'll explain it again, I've explained it before in other videos, the U.S. Treasury is how the United States monetizes its debt. It's how we finance our debt. When there's high demand, lots of countries and investors going to auction trying to buy our treasuries, the prices go up and the yield, the interest rate goes down. So the bonds get more expensive and the interest that we have to pay on our debt is less. If there's loss of trust, there's going to be fewer people buying. This means the bonds have to get cheaper and the interest rates that we have to pay go up to try to attract more people to come in and buy our debt. To refinance our debt means we refinance it at a higher interest rate, so our debt service costs will go through the roof, which will crush us economically and financially. So if the Fed were to lose independence, it would hurt investor confidence in the United States. The stock market, the bond markets would all fall. And any reduction in the Fed's independence would add upside risks to inflation and concern from the rest of the world about continuing to have the dollar as the reserve currency of the world. This is why you saw the bond market rebound after President Trump said he had no intention of firing Powell. The bond market and the stock market rebounded. Keeping the Feds independent is critical for trust in the dollar. Loss of trust will not be good for the future of us, for this country as a reserve currency, or for us as a nation. What you're also seeing now, too, though, despite this is why you saw Mr. Griffin, one of the biggest donors of the Republican Party, come out and say that President Trump has tarnished the American brand. I'm not going to agree or disagree with that. I don't want my channel to be political. I'm just trying to put information out for you, the investor, to consume and make your investment decisions off of this. But what I believe you are seeing now is you're seeing a situation where the dollar are weakening. This has to do with countries starting to diversify their investments away from the United States. You're seeing that with the German bond going up and the Japanese bonds starting to go up, and you're starting to see gold. It's gone up 30%. This is from countries and investors reallocating their investment away from the United States. So I'll give you an example. Say a country invests 60% in the United States through treasuries and things like that. We don't know if we can trust the United States like we once did, so let's diversify a little bit. Let's take 10%. So instead of 60% in the United States, we're going to be 50%. Let's take 10%. Let's buy some gold. Let's buy some German bonds. Let's buy some Japanese bonds. So 10% in itself from one country doesn't sound bad. Now multiply it by 20 countries. 20 countries diversified out of the United States by 8 to 10%. That's huge. That's why it's so important that trust is maintained in the United States as the most safe and best market for currency to come into our country to invest. This is why it's also so important for the Federal Reserve to maintain its independence so that they are strictly making their interest rates lowering or raising interest rates based off of sound economic data, not political influence. So it's something to watch. Watch the 10-year Treasury. You want to see it go down because at this time, where this country is $36 trillion in debt, Janet Yellen made a huge mistake a few years ago. She was a former Treasury Secretary. She refinanced a bunch of debt in short-term loans, short-term treasuries, notes, 2-year, 3-year, 4-year notes. So we have $9 trillion, or 25% of our debt, due to be refinanced this year. You want to watch that 10-year Treasury because you really want to see that at 4 to below 4 if we can get it there, because our debt service will be cheaper. It'll be better for the country. So those are just some things to watch. Again, as I've said, the Federal Reserve, whether you like him or not, whether you like Jerome Powell or not, Doesn't matter. The Federal Reserve needs to maintain its independence from political overreach. That's what I got for you today. Working Man Investor. Keep grinding, people.